Welcome, everybody. It's Tyson Underwood here, and welcome to the very first Loans by Tyson Q&A session, questions and answers. So, what is this all about? Um, Essentially, I've collected questions for the last probably 3 years, really since the end of COVID, middle of COVID, about the real estate market, the mortgage market, the rate market, where are things going? Why are they going? What's happening with housing, all kinds of things. I mean, I have tons and tons of questions from clients, from comments on social media that I just feel like they need to be answered on a public forum. Maybe somehow it will help. We can build a community around this and maybe dispel some of the things that are out there that I feel like aren't the truth. Take some of the fear out of the real estate market, some of the fear out of the mortgage market, and kind of go that way. So I thank you for being here, whether you found me on YouTube or X or Instagram. I really do appreciate it. I'd love it if you subscribed and hit the like button below. I'd also love it if you asked questions, threw more comments in there, questions in there. I love to compile these questions together and answer them for you. So tonight, we're going to make this a little different than what the normal format I planned on being or doing would be. To normal format is going to look a lot like me answering questions that I've got from you over the week, over the month, or from wherever I pulled them up from. So what this is going to look like tonight is just to give you a little quick, really brief backstory on who I am. And so let's get into that here real quick. So I'm Tyson Underwood. I've been in the mortgage business now for 24 years. I've seen just about everything, the ups and downs. I worked for a bank for about a year when I first got in the mortgage business. I became a broker shortly thereafter in the big Washington Mutual home savings meltdown. I went through that. I rode the refinance rates down to a whopping 7%. And I thought that was crazy low at the time. I had bought my house when it was 9.5%. And I actually didn't feel like that was too bad at 9.5%. Rode that down to 7, refinanced everybody I knew down to 7. Went through a little bit of a tough time. Then we came into the whole market in the the 2000s, where that was kind of a boom time for us. It was a very good market here in California. It was a good market in the mortgage business. And then we moved into owning my own company. I moved into owning my own company with my own escrow and my own title on the side. And it was a fun time. I had insurance in there as well. It was a very good business until 2007. 2007 was the crash, the big crash. And we rode through that. The business shut down. At that point in time, I ended up going to work for a major bank. I'm not going to name names, Wells Fargo, and got to see firsthand what it was like to work at a big bank. And I'll tell you what, as soon as I could get out of there and back into the broker business, I surely did that. So I've been back in the brokering business now since 2009, and enjoyed every second of it. So when COVID hit, obviously we all got locked down to our houses and put back into house jail, I guess. I moved to my garage, set up a command center there, and worked diligently for 2 years, refinancing everybody down into the 2s and 3% range. So that was a fun time. Definitely an interesting time period. But on the side, what I have been doing since about 2000 and 17, 18, maybe probably 18, maybe 19 actually, was I started compiling questions. I started getting all these questions from clients. I started to see the fear factor really ramp up in the real estate business, primarily driven by probably the fear out there with the uncertainty of COVID and what was happening and the zombie apocalypse and everything else that seemed to be apparently about to happen to us that never did. But I had all these questions and I had written them down and saved them in folders and decided that one day I was going to start a forum where I could answer these questions in a public forum so that I would put them back out there to the universe and hopefully help somebody with a question that may be on their mind that has to do with real estate, that has to do with mortgages, anything in this business, because it has a reputation to be somewhat of like going to the dentist. Hey, I'm going to buy a house. Oh God, I got to buy a house. I got to go and do all that stuff. It doesn't have to be that way. I've worked for 24 years in this business, and really, hopefully, we know, of course, there's always going to be difficult transactions, but primarily most of the transactions that we do, we strive to do the best we can as far as customer service and making it an easy process for the borrowers. So enough about me. Let's jump into what we're going to be looking at this week. And like I said, your comments anywhere, whatever social media platform you found this on, throw a comment in there or a question in there, and for sure it will get answered in one of our sessions. I'm going to try and put these out once a week. And if it doesn't end up being once a week, it's going to definitely be once every other week, and maybe even a week and a half, somewhere in that time frame. So the goal is to get them out every week, about Sunday night, Monday morning, somewhere in that ballpark. So anyway, first question that I had that I thought was pertinent to where we're at today in the market, because I've seen this question specifically. I guess I'm working from most current back to where things were in the past, but I really like this question. And the question is, why is the housing inventory so low? I've got that in so many different forms, and whether that's somebody buying or selling, or what is it doing to the market? It's definitely an interesting question to address. So the question is, why is the housing inventory so low? Well, one of the first things I see is I hear clients come to me and say, hey, we're thinking about making a move, and it's so hard to find a house to buy. And they get discouraged. They may have made an offer on 1 or 2 houses or 10, and it's just fallen through, or there's been 30 different offers, or I've got 50% down. I'm still getting beat out by people. What is happening out there? And they just get discouraged, and they feel like, you know what, we're just going to shelve buying a house right now, and possibly we're just going to wait it out and see when inventory picks back up, we'll jump back into the market then. Now, I'm going to tell you right now, I feel like that is probably not the best strategy. And here's why. Plain and simple, there aren't enough houses available. And why is that? It's not a shortage issue that is brand new. It's not a shortage issue because of COVID. It is literally something that has been brewing for the last 14 years. And let me show you how. So take a look at this slide, and you can see right here, this is going to be a slide. It's really going to state and show you the underbuilding. That underbuilding is really a long-term problem, not a short-term problem. Underbuilding has been a long-term problem for the last 14 years. So this graph is going to show you basically single-family housing units completed over the last 52 years. And you can see in blue, the averages are pretty high. So those blue up to 2007, we're looking at an average units, and that black line across there is the average 52-year average, right? So you got the 52-year average here, and that average is going to drop off considerably right there about 2007, 2008. It's going to fall off even harder 2008, 9, and 10, and 11. It's 12. It starts to come back a little bit, but this little trough is massive, and I can't overestimate or express how that has really wrecked our inventory. And really, this is the main culprit long-term for inventory shortages. There is a catch-up game that we have to do. Yes, if you look at the last year, which is 2003, you do see another blue line. That is because we touched on the 52-year average this year. And with that, it doesn't help. It doesn't make a difference that we got to that point, right? So for 14 straight years, builders just didn't build enough homes to meet the average. And that basic underbuilding created a huge inventory deficit. And even though that the new construction might be back on track here in 2003, we'll wait to see how the numbers and how the year finishes out. The historical average right now, it's basically not looking good. And it's a long-term inventory problem. And it's not going to get solved by the end of this year. It's not going to get solved next year. It realistically isn't going to be solved for a few years. We're going to really need to recover a lot of the deficit back on this. So that's the first issue. I think that's the biggest issue and it's the biggest long-term issue as to why the market is where it's at. Why is the inventory so low? Basically because there's not enough houses. And it's not because of any other reason. There's just not enough houses. There weren't any built. We spent 14 years building this deficit. And now we've got a few years that we're going to have to really pile forward. This 2003 year is going to need to finish out much stronger than where it's at right now. And we're going to have to see some record years over the next couple of years in housing build completions. So that's the first and number one issue. The second issue is what I like to call the lock-in effect. So this is where mortgage rates have created, because of the low mortgage rates, they've created a scenario that I like to call the lock-in effect. Why? Because it's basically, you've got homeowners who are reluctant to sell because of where rates are at right now. It's plain and simple. They don't want to move and take a higher rate, something in the sevens, when they've got a 3% rate or a 4% rate, or maybe a 2.5% rate. They just don't want to jump that to 7%. So what they're saying right now is, I don't think that's a good idea. I think I don't think I'm going to qualify. I don't feel like it's something I want to do. So take a look at this chart and we'll see how exasperated this problem is. When you see 70.7% of mortgage rates are less than 4%, right? You have 26% that are under 3%, almost 45% are between 3 and 4%, right? So what does that mean? That means that you've got a lot of people sitting on the sidelines, whether they need to move or they don't need to move. I think what really is dictating moving right now, and people need to think about, is really just, does this make sense for my family or my situation, whatever that might be? If I've had a fourth child and I still have a 2-bedroom house and I have the cash to move, but I just don't want to pay 7% on my mortgage, but I'd rather shove all 4 kids into one room and have my wife tear my hair out every night and me sleep on the couch most of the time. That goes towards quality of life. And I think if there's a scenario in a situation that needs to be explained, it's just this. Like I said earlier, I bought my first house when it was at 9%. That was 24 years ago, or 25 years ago when I bought my first house at 9.5%. A year later, it was 8%. 2 years later, it was 7%. 3-4 years later, it was 5%. Back again, it went back down to 4%. I eventually ended up at 2.5% on my rate, over a 20-year period of time. But every year, pretty consistently, maybe every 2 to 3 years, I refinanced that rate down. And as with all of my clients, we just rode that rate down. And it seemed like a big payment at the time. Let's just look at this as you're dating the rate and marrying the house. You're marrying the situation, meaning that if I need to get a bigger house, I need to get into a different area, I need to get my kids into a specific school, I need to move out of state. Whatever it is that I need to do, is that prioritized below or above the rate that I'm going to date, right? The date means I'm just going to date this rate. Next year, I'm going to dump that rate. I'm going to have a better rate. And the year after that, I'm probably going to have a better rate. And right now, because rates are where they're at, the market's going to dictate rates need to come down. So we're going to date that rate all the way down till we find that perfect rate and match it up with that perfect house that we've already married, right? Does that make sense? Because I feel like everyone I've explained that to has gone, okay, that makes a lot of sense. So putting that out there is really key, because I feel like you need to really prioritize your needs over what the interest rate is. If you qualify, you qualify. Hey, 2%, 3%, 4% rates, you could be waiting forever for that to hit again. Or you could be off the couch. Your wife could love you. Each kid could have a bedroom, and you could be merrily on your way. And then when rates come down, My team will come alongside you and refinance that down and give you a $200 break every month. Every year we refinance that down. So that's just something to think about, right? Really prioritize, have a conversation with me about, does it make sense? Because sometimes, honestly, it doesn't make sense. All right, the third thing. First, we've got housing shortage, right? We have not enough builds being built the last 14 years. Secondly, we've got the rate lock problem. We've got mortgages at a low rate. We've got 70% of people under 4%. Nobody wants to dump their mortgage, so they don't want to move. They don't want to buy. They don't want to refinance. So you're seeing a lot of stagnancy there. Then the third thing is misinformation. Yeah, this is a big one because I spent a lot of time not arguing, but I guess bantering with people about what they hear on CNN or CNBC or Fox News or whatever their business source is about the mortgage market. Now, you have to know that the pundits on TV are doing a job, right? Their job is to get eyeballs on their media, and they usually need to do that, and the way they do that is to address it with some type of fear-based headline or some fear-based article. How about, I'm sure you've heard this, how about the housing market's going to crash? Be ready. How about don't buy anything right now? The market's going to drop 20% next month or next year. Those are the two big ones that I hear in different forms and formats. It's crazy how many people that I've talked to have said, no, I'm not buying a house right now because I think the housing market's there's a bubble and it's going to crash. It's going to pop next year and market's going to implode. Or, no way. I'm not going to make that over asking offer price because prices are dropping 20% next month. The question is, has that happened? It's been 5 years and we've been listening to the media headlines say it every month. Every housing report is showing for the last basically 3 years, 4 years, appreciation just steadily taken away. And when they get to the year over year numbers, it's even better. Just, you can't listen to the media. Find the facts. Ask me what they are. So I did pull a quote from Jason Lewis. He's the co-founder and chief data officer at Parcel. And he said, in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt. So with that being said, I think that the biggest thing we can take away from this is, if you have questions about the housing market right now, the mortgage market right now, put them in comments below and let's discuss them. Thanks for tuning in today. I really do appreciate it. This went a little bit longer than I wanted to. It's going to be about half of this normally. And we will go and see you next week for a new set of questions and a new topic. Have a great night, you guys, and thanks for tuning in. Make sure you like and subscribe below.